Hi, I'm Tajinder Virk. I'm the founder of Finvasia.
So here's something interesting I discovered in this conversation. You may think that Zerodha and other similar online brokers allow you to trade without any brokerage, but that's not the reality, and they charge for certain services. The true zero brokerage app for India is probably Shunya from Finvasia. And in this episode, Tajinder Virk, the founder of Finvasia, talks about building a portfolio of global fintech businesses from India under Finvasia's umbrella. Stay tuned for Akshay's freewheeling chat with Tajinder Virk as he talks about his journey from Wall Street to bootstrapping Finvasia and building businesses that are disrupting multiple large categories.
Okay, cool. Can you spend a couple of minutes on your journey to becoming an entrepreneur? Maybe we
I
can
grew up
start
in
there.
Chandigarh.
Yeah.
I grew up in a family where my father was in service. All of his family members were in service on my paternal side, and my maternal side were all businessmen. So the choice was obvious as a child what lifestyle I like more. So it was fairly obvious. I knew it right at the get go that I want to be an entrepreneur.
Uh,
I did my engineering from Punjab Engineering College. And then during my engineering, somewhere a lot of my friends started talking about going to US and doing all those things. And I was like, it sounds like a good idea, but if I go there, I don't want to go into engineering. I'll probably go into finance. I got acceptance into an MBA college in US. Um, Funny enough, I got 100% scholarship over there. Initially, I started working with a hedge fund. Most of the time spent was in building strategies around mathematical models and how to make money in the stock market. Um,
this
I
was
was
for
very young,
publicly listed equity.
publicly listed companies, by
Okay.
and large.
Mm.
I was 23 years old back then. I went on to work for a family office where we had about $1.3 billion in asset under management, and I was their risk manager for managing all of those assets. And I met a lot of hedge fund managers like Steve Covens, Dr. Neil Hopper, the famous guy who sold S&P puts all the time. I was lucky enough at the age 25, I became vice president of the Fortis Bank for the global equity markets division, where I, along with three more people, four of us, we were responsible for managing $1.6 billion for the bank across the world in statistical arbitrage models and pure arbitrage models. Like,
What does that mean? Statistical arbitrage, pure arbitrage models. Like you were not
uh,
doing like fundamental research and investing in companies, but
no, I
you
was
were.
not doing research.
Hmm.
Given that I was a quant and I was a engineer by background, I looked at stocks as objects. And I felt that these are objects that basically have their own phenomena of interacting with each other. What we call mob psychology could somehow be implemented within the price action behaviors of stocks. Because at the end of the day, if I take out all the noise from everything that I see around me, all is that is left over there is demand and supply. And that leads to market microstructure where we see that there are aberrations in the market, and we try to quantify these aberrations using mathematical models. And then we would say, how do you quantify these aberrations and put them into a formula that is not backward looking, that is forward looking? That is what statistical arbitrage is: causal relationships between multiple financial instruments on their behaviors. And pure arbitrage is essentially where it has to meet three conditions. So there is zero risk, you book your profit at the initiation of the trade, and there is no capital involved. That's the fundamental more definition of arbitrage. And that's what we were doing.
Well, amazing. What's an example of a pure arbitrage?
An example for pure arbitrage would be, let's say, for example, if I sell the Nifty future and I buy all the underlying stocks of Nifty at the same time in the same proportion, then I've bought and sold the same security.
Hmm. Right. Okay.
And if I sell the future higher than the cumulative price of the underlyings, then I make a profit.
Okay. Interesting. So you were doing the strategy,
Yeah.
and you had about $1 billion+ under management.
So the whole thing, came together. I had this itch to come back to India. I started discussing with the executive directors of Fortis Bank, with the top management. I made a trip to Hong Kong. I made a trip to Brussels. Brussels was their official headquarters, and I told them that, guys, this is what I want to do. Why don't you, let me drive Fortis India as a venture? um, they all got very excited about it. I was able to convince them, and they put a team of legal with me to start working towards launching Fortis in India because they saw my results. They saw that I was doing and delivering. And back in the days, there was more risk taking capacity. This was right before the financial crisis. We came to India, we filed for incorporation in India, and we realized there's something called Fortis Healthcare in India already.
Yeah, right.
Well,
Okay.
Fortis Bank was like a 110 years old bank. It was the second biggest bank in the world at that time in terms of revenues. And then they had to get into a lawsuit with Fortis Healthcare. And I don't know what happened at that point. They realized that, maybe this kid is too young. We have to take the things into our own hand because India sounded very promising. I did not like the whole idea of being sidelined just because I'm too young. I don't think that's just the only reason. I think there were other things that came together. Um, when they saw this, they probably discussed among other people that they knew in the industry, and then they realized that the best thing to do is to do an acquisition. And they found a target to do acquisition, ABN AMRO. That's when ABN AMRO got bought it. And because I was not part of the whole process, I quit my job.
Okay.
And
They,
you
they
know
bought ABN AMRO's wealth management division, is it? Or like
y-
their investment banking?
was essentially ABN AMRO was bought in by a consortium of three banks, and Fortis was one of those banks.
Okay. Okay.
And during the acquisition and post acquisition, how they split, was different ball game because then the financial crisis hit the market, and people didn't have the money that they thought they have, um, and then things went sideways. But good for me, by that time I was out of the bank.
Right. Okay. Okay. Then what next? You're out of a job.
Then I
Did you?
started discussing with my brother. I joined another hedge fund, which was an India focused hedge fund. And my goal to him was, boss, I want to go to India. Back then, I was making $500,000 a year in my take home a year, and my brother was getting paid like over $150 an hour, and he was a management consultant consulting for Pepsi and those guys. And then while we were discussing, I met this hedge fund owner who had an India focused hedge fund, and I was like, I want to go to India. I'll try working with you, and if things fall in place, we'll do something together. Otherwise, I'll start my own business. So I spoke to all these hedge funds and banks that I've worked with, and I was like, we'll manage money for you from India, and will manage money for you across the world, doing arbitrage, statistical arbitrage. And given our history and performance, they agreed. And we had quite a sum of money to manage for these banks and hedge funds. And we started Finvasia. So Finvasia started as a wealth management business back then. So we set up in Chandigarh a small office. There were only four people in the office, and I was like, "We'll manage. Let's see how it goes." Um,
Yeah.
and
Before you start, I have a couple of questions here. First of all, what's a hedge fund? How is it different from, let's say, a portfolio manager?
hedge funds are in a way wealth management firms that differentiate themselves that they will only manage money for very high net worth individuals. The minimum back then in 2005, you had to be worth at least $5 million and making at least a quarter million a year to qualify for a hedge fund to take money from you. And they would only work with these kind of individuals. They would deploy scientists and mathematicians and physicists to build their strategies, and the goal was to beat the market, outsmart the market, by not taking as much risk, because once you're wealthy you don't want to lose money.
Uh,
So
is private equity and hedge fund similar?
no, they are different. You can have a hedge fund working in private equity space.
Okay.
So private equity is, I would say, a subclass of a type of investment which could be done either via hedge fund
Hmm.
or via larger investment banks.
Okay. 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 Got it. Got it. So, very well. Why would a hedge fund outsource money management? Because that's their core business, right? Why would they outsource it to you? That's
Because
like that's the engine which runs the machine.
yes, I mean, a hedge fund is not a hedge fund if there are not people over there. If you think about it, every business is a business because there are people over there and they have certain value. When and it's when we say a hedge fund is managing money, it's actually the people at the hedge fund who are managing money. And given that they've seen the performance that I had, it wasn't easy convince because all of my performance was audited in a way. It was at the bank or at a hedge fund. So, there was a proof of what I have delivered. And then I guess also because I was at a lot of seminars being a panelist and describing, so I was very visible uh, to these guys, and they felt it's obvious. He wants to live wherever he wants to live, manage the money for us, stay within our mandates, and that's it. And you take your money, and we, take our money.
So, I watched this series called Billions. It seems like the hedge fund industry is a lot about star managers. Like it's I mean, everybody is always seeking out those star managers who deliver better than market returns, and it's very, very people driven kind of a business, basically reputation driven rather.
Indeed, it is. Hedge funds are always looking for those stars who can deliver. And once they find it, they would do anything to keep you happy.
Mm.
Like the rock star of Wall Street. That's what we felt back in the days. I would
Okay.
wake up, okay, go to the office. I feel like I want to sell $100 million worth of share of Lehman Brother. I don't have to call my CEO to do that. I'll just do it. You know. So it was that rock star feeling.
So because you were a star, you had a reputation, so therefore people trusted you with their money. The hedge funds trusted you with their money. So, and what did that involve operationally? Like you set up an office in Mohali. Uh, what did it involve? Like you, like researching and taking judgments and then executing those judgments, like at a simplicity.
By and large, mathematical models were built. I had built those mathematical models and I was working on it. My brother was more, management guy. I'm more of a quant and technical guy. So he was taking care of, how the operations will happen. We used to trade from Australia. Australia opens 5 o'clock in the morning and US closes 2:30 a.m. next morning. And we were trading, almost 18, 20 hours a day. So people have to be split across, execution has to be done, reporting has to be done. And it was, so like I said before, it was both a good and a bad decision to be safe. Somewhere or the other, we felt like, wow, amazing. I'm still making a lot of money sitting in India. It's like best of both the worlds, but there was not it didn't feel like we are doing something. And
In what sense? Like you would be making less money than if it was your own hedge fund. Was that what you were feeling? That if you were running a hedge fund
no,
yourself, you would make more money than doing it for other hedge funds?
that dissatisfaction because at large people don't understand finance. And then the second thing we realized is we are not solving a problem, because if you're solving a problem, people tend to recognize you, they tend to know you. And over here I'm solving a problem for a very small group of people who are not even living in India. And it just did not make the cut. So I sat down with my brother, let's look at something else, let's do something. He's like, what do you mean? And but the good thing that happened is while we were going through all of these, what should we do? How should we do it? At the end of the year, we saw our balance sheets and we saw that, holy crap, we paid so much money to these brokers over here. And just if we did not have to pay these brokers, we would have made 10 times more, or maybe not 10 times, 2 or 3 times more money.
And you're
And
talking of Indian brokers or globally?
globally as well as India.
Okay.
But since I was sitting in India back then, and I was like, okay, what do we do? So we said, okay, first thing is we have to stop this cost. Let's get a license, and let's stop paying any broker in India. Then we went on, we started applying for licenses.
And which year
And
was
then
this when you applied for?
this, I don't remember, I think 2010 or 11,
Okay.
if I remember
Okay.
correctly, something like that.
And you
Uh,
started this out in about 8 or 9, I guess.
2009.
9 you started. Okay. Got it. So
Yeah.
2 years after running that
Yeah.
you decided to get a broker license in India.
Exactly. And that was purely to serve ourselves. Then within the office, when you have smart people around you, they bring smart ideas. And someone said that, why don't you start a brokerage? Since you are getting a license, you're going to set up all the operations and every single thing. And then I spoke to my brother. I'm like, if we have to do this brokerage thing, then let's just do it a little bit differently. And then we started discussing. uh, we launched the brokerage, so we started managing our own money with the one license we got. We had more muscle power to tell the broker, we'll only pay you this much while you get the second license. And somewhere or the other, we said, let's get our feet wet. Let's launch a brokerage product in the market. Let's not try to innovate anything over there and see if we want to do this business or not. And when we looked at it, and we were like, wow, yeah, it makes sense. Someone told me, one of the guys I met back in the days, he's like, you're trying to get into the brokerage business. This is a dying business. I was like, no, this is not a dying business. This business has already died. This business died in 1987 when the crash happened, when E-Trade and Charles Schwab and Ameritrade, they took over all the traditional brokerages in US. This business was dead back then. And if we are still thinking of brokerage as a business, we are living in an old world where essentially, personally speaking, and just purely my personal opinion, I think anything that has to do with middlemen is not a good business. A business is not a business unless it solves a problem. It has to solve a real problem. What's a real problem? The problem is within the financial industry, your raw material is money, your end product is money. What do you do in between is your product. Do you take $100, make it $120? Then you made, you know, the final product. But if you take $100, you take $10 of commission out of it, and then you start, making money on top. It just doesn't make the cut. And then, the unanimous decision between me and my brother was, this industry is already dead. We don't, let's put the last nail in the coffin. Let's launch a zero commission ecosystem in India. And that's how Shunya, so to speak, came into existence. Um, but that's, like I said, the itch to keep on doing something led us to do all the other things that we did after Shunya. But that was sort of the transition, slow transition into the obvious thing that an engineer could do in a finance world was
And
this.
when did you launch Shuni?
I don't remember the numbers exactly. I believe we launched our first version or avatar of brokerage business in 2012, I believe, in that ballpark when we were experimenting. Then in
Okay, so
2015, we
2013 you
launched,
launched, and
what is now called Shunya, sort of the zero brokerage ecosystem. And it was not just a zero brokerage. Even if you give zero brokerage, you have to pay a clearing fees. You have to pay for technology. You have to pay for, tens of other things. So we went on, we became professional clearing members, and, we built our own technology. And we said, when Finvasia says its product is zero commission, it has to be zero commission. No administrative charges, no clearing charges, no call-in trade charges, no surprise charges, nothing. Zero means zero. You come, you trade, you go, you take your money. So that took a little bit of a while to engineer and get all the relevant licenses. So I think 2015, August 14th of August, 15th of August 2015 was when we launched the Independence Day.
give me a broad understanding of what's a brokerage business.
um, Brokerage, you mean financial brokerage, financial commission business, basically
Yes, equity, like, yeah.
the equity trading commission business. Let's say you open an account, a demat account or a trading account with any broker. Um, your journey starts with you pay a certain fees to open the account, sometimes $200, $300 as an administrative fees. You deposit money over there, and let's say then you go and buy a stock or a future or an option. When you go and buy or do a transaction, there is a commission that the broker charges you. Could be a variable fees, X amount per crore of notional value, or Y dollars per ticket charge, like a flat fee structure, something or the other on that lines. Then there is a clearing charge that you have to pay because the broker pays to the clearing member. So the broker will pass you on this clearing fees. Could be 10 or 20 rupees per crore, something like that, or sometimes a minimum flat fee. Then there could be other charges if you call the broker, and the call in trade charges. You're calling the broker and you are giving the order over the phone. Um, and then there could be monthly annual maintenance charges to your to your trading accounts, or sometimes there could even be a minimum monthly charge because you're using their technology, like pay 2,000 rupees a month and then you can trade this. So all of these different types of charges come together. um, and that is how that is one of the parts of the earnings of or a major part of the earning of a broker. When we look at all of that, none of that made sense, and we said, let's just make everything zero. There should be no account opening charges, no annual maintenance charges, no call-in trade charge, no technology charges for using our trading platforms or anything like that. No clearing charges, no administrative charges, no commission. Like when we say zero, it should mean zero, and that's where we famously say that Aryabhatta gave shunya to the mathematical world, and we gave that shunya to the Indian financial ecosystem. That zero means zero, and it's very
Mm.
important if you think about it. Um, and why I see that it has solved a problem, the reason why Shunya, is what it is today, is because just a few things. It's not that we have built a rocket that will take the stock market to the moon or to the Mars. What we've done is we said, let's eradicate this middleman, because sending a message from my server to the exchange server does not cost anything. Just like sending a WhatsApp message, just like sending an email, it's an electronic packet that's been sent from one server to another that costs maybe nothing, almost nothing. If you don't pay for WhatsApp, you don't pay for using your email or things like that. Why do you have to pay for sending this data packet to the exchange? And if you think about it, let's say a mathematical example. Let's say you are a trader, you have 1 lakh rupees in your trading account, and you want to trade, let's say futures. You get 10 is to 1 leverage from the exchange, and you can basically buy 10 lakh worth of Nifty and sell, uh, you know, with just 1 lakh of margin. But if you're buying 10 lakh worth of Nifty, you have to sell that as well. So for that 1 lakh rupee, you're doing a transaction of 20 lakh rupees. Now, let's say you're a day trader and you trade just once a day. You go in, you buy Nifty and you sell Nifty, and that's your trade for the day. You don't do any more trades, but you do it once every single day for one full year. You only have 1 lakh rupees in your account. You have transacted 20 lakh rupees multiplied by 252, or even if you do 250, you've transacted 5 crore. So with just 1 lakh rupees, you've transacted 5 crore. And if you look at the commission that you pay on it, based on my mathematics, and there are different formulas for flat fee versus percentage commissions, things like that, it comes out to be about 20% on an average when I did the math back then. I know for a fact because I've worked with the largest hedge funds in the world and the biggest money managers in the world, who are known as the phenomena and the gurus of Wall Street. And they have not made 20% a year consistently. Warren Buffett made 21% a year consistently. He started investing when he was 11 years old. Today he's almost 85. He made 20% a year in that time frame, and he is the richest, or at one point he was the third richest man in the world. He still is worth, you know, 60, 70, $80 billion today by just making 20% a year. And you are taking that 20% in commissions away from traders, and you hope that they will make money knowing that they are not Warren Buffett. It's not going to happen. As a result, we see more and more people come and complain, stock market is a gamble house. We lose money over there. You go and invest just because you're going to lose money. It's a video game. I hear all of these phrases, and deep down I know capital inclusion is must. I have not seen anyone becoming wealthy unless he's made investments. And you cannot make investments in just properties or houses around where you live. You cannot just make investment in buying gold, or you cannot just make investment putting money in a fixed deposit. Most of them are known, except in property, both gold and fixed deposits are known not to or barely beat inflation in the long term. You don't become wealthy. And on one side, you are not putting your money to the right usage. And we know more and more the wealthy people in the world are wealthier because they are investing their money. And that is the source of them growing their wealth. At the same time, if you are an entrepreneur, if you're a businessman and you go to, you build some business, you want to raise external capital, one of the ways to raise external capital is, you know, uh, eventually everyone wants an exit. So you have to go to that IPO route at some point, be able to become a public enterprise. And that is everyone's goal. But would that goal even exist if there was no capital market? If there is not a liquid enough market, if there's no financial inclusion, the liquidity will drop in the in equity market. If liquidity drops in the equity market, it impacts companies and entrepreneurs who want to eventually go public, because at some point they have to raise money and they have to cash out on what they've done throughout their lifetime. But if there's not liquid market out there, if there's not because of lack of financial inclusion, that dream also does not come true. So the whole economic cycle goes for a toss if we do not bring the financial inclusion, we do not bring more liquid capital markets, and we don't reduce and remove frictions from the capital market.
So, like the Robinhood model, Robinhood is, I think, pure zero brokerage. They don't charge anything at all. So their model is payment for order flow. Is your model similar to that? And for people who don't understand, what is payment for order flow?
Payment for order flow is not allowed in India because there's no OTC market in India. And I personally do not believe in payment for order flow. I used to buy order flows when I was at Wall Street, and I know that institutional traders are at an advantage when they pay for order flow. There are different ways to look at payment for order flow. So if you look at it, when your orders are going to an exchange or a specific trading venue, which we call a multilateral trading facility or a unilateral trading facility, which can also be a dark pool, and that becomes more and more technical as you go more into it. But in a very simplistic term, if I have to say it, um, I'm a hedge fund. I want to buy the stock of Apple, and I want to buy 100 million shares of Apple. And I rather, so when a retail guy is going to the exchange and he's going and hitting the bid and the offer over there, basically he gets what is the price that is there at the offer. The hedge fund comes and say, we will keep on giving you the price at the offer. You just hit my essentially, so let's say the retail guy is selling Apple, and the hedge fund wants to buy Apple. So what's happening is the hedge fund is getting filled at the bid price while the retail guy is getting, the lower price. So in a way, puts them at a disadvantage and gives hedge fund an advantage, to be able to get that order and fill their, market making books, if you have to put it like that. Um, but that's not a model that's allowed in India, and we do not do any payments for order flow in India whatsoever. And that is where uh, we go through audits every year, and because right now we are among the top 15 volume generators for the exchange. We come in what is called enhanced supervision, which means that regulators are more concerned about brokers like Shunya, who are too big to fail in their terminology, and they have to go through, reporting a much more diligent reporting process, which also is intraday reporting at multiple times, based on the positions and the equity and how much money we have to put in the exchange, things so on and so forth. If you look at Finvasia as a larger picture, we are into financial services, we are into healthcare, we are into real estate, we are into technology, we are into blockchain. And all of these businesses that we built were built around the same intention to do something that basically will be disruptive, bring engineering into the traditional businesses, and re-engineer the whole process. When we got into healthcare, and now we have multiple products that we're working with in healthcare, which is for diabetes reversal, for example. There's a lot of research that happened towards diabetes reversal that we are implementing in
So,
real time. as it comes out.
No, no,
Um,
please finish your thought.
and Shunya is just one of the 10 other products that Finvasia has with the exact same intention. Let's disrupt the markets that we go in. Let's solve a purpose. Let's create an ecosystem that will be forward looking and that challenges the status quo of how the markets operate and behave right now. One of the biggest challenges we had at Finvasia was how do you hire people uh, who are not trained to work a certain way? For example, how do you hire a salesperson to go and do sales for Shunya if there's no commission involved? And we had to hire people, freshers, train them, and tell them there's nothing like commission. You get paid salary for a reason, and you get paid performance bonuses for performances. Don't think about commissions.
Okay, cool. Cool. So first, let's wrap up what we were talking about last time. The question I was
Mm.
pestering you with is how does a zero brokerage make money for you?
Um, Basically, I believe brokerage is an unnecessary evil to anyone who wants to manage his money.
So you're saying people who became billionaires just compounding at 20% a year.
You know, so if you look at just the history of, if you go back into the history, brokerage was an ancillary business. Investment banks, they came out, with this whole idea of IPOs and things like that. And then once the IPO started happening, and then there were secondary offerings, they had to somehow bring it to the masses, to the retail consumer. And that is how brokerage became a necessary a service that they had to give. And then the exchanges came together and all of those things happened, things evolved. But it was never a business per se up until very recently. When I say recently, I mean, late 1980s is when we saw that coming up as a business. And there was a time when brokerage was such a large business that people, started looking at brokerage as a complete business of its own, by and large. And this goes back to, all the different movies that you would see from Hollywood, where brokers on the phone try to sell people stocks, and they, are making money from that. Um, Fast forward to, let's say, 2000, after we had the dot-com bubble burst, people realized that they were paying a lot in brokerage. And early 2000, 2001, 2002 is when flat fee brokers started coming into existence. Talk about E-Trade, Charles Schwab or Quest Trade or all of these guys that came into existence back then. And then maybe not Charles Schwab, but E-Trade and, those kind of guys. And they changed the whole brokerage business to say it's a flat fee business. You pay us $7 a trade, or $5 a trade, or $2 a trade, and we don't care what the size of the trade is. And then, you fast forward a little bit more, then there were people like Robin Hood who came out who said zero commissions, zero, you don't pay any commission, but you still pay clearing fees and you still pay administrative fees. And we would make money from your flow by giving the flow to dark pools and things like that. Fast forward to 2015, Finvasia came in and said, well, guys, let's not do it in piecemeal. If you want to go zero, just go zero. Zero means zero.
I have a question. The cost of a brokerage is all fixed, like irrespective of how many trades you execute, your costs are fixed. Like you have probably like a fixed fees that you give to the exchange, and so it doesn't depend on how many trades.
It does not depend. I mean, the only thing that is basically is okay, if you go from 1 million messages to 100 million messages, you might want to put two more servers over there. It's not that the exchange is going to come and charge you more because you're transacting more. And it's
Like
not that
it's
exchange
like
charges anything to begin with.
okay, okay, got it. The cost is only the technology infrastructure, which has like a step change function rather than every additional trade being executed costing you some few pennies more. That's not
Exactly.
the case here. Okay. Okay,
Exactly.
got it, got it, got it. Okay. So, which means at scale, it doesn't cost much, and which is probably why a company like Zerodha is bootstrap profitable because they reach scale and the cost would probably not be so high, allowing them to become a profitable bootstrap business.
If you look at any of the listed brokers in the world, you would realize that their average profit margins, net profit margins, are extremely high. They range between 30% to 70%. And that's for the same reason. As you scale up, there's no cost.
Hmm. Got it. Got it. Okay. Um, okay. So you still need to give the listeners some answer on how you make money. You're not a charity. You already said that. You don't
We
want
do.
people to assume the worst, right? It's better to give people some idea of how
There's
you make
nothing.
money.
There are benefits that we get from the exchange when there is a lot of volume. Exchange does make money, and exchange does pay broker a part of those profits in terms of rebates that come to the broker. And those rebates are very small at a very small level when your volumes are low. Right now, if I go by the right count that I have from my business intelligence guys, we are among the top 15 volume producing brokers for the exchange. So our volumes are fairly large. And whatever rebates we are getting is way more than enough for us to cover the cost and make you know money on top of it. And then it's not just a brokerage. Finvasia is a house of brands. There are multiple brands that we have. We have more than 10 brands across the world. We do plan to bring some of them to India. The more people trust us, use our platform, the more they will be willing to trust other services that we bring into India. So we don't have to necessarily charge people for something that we don't have a cost. We'd rather prove ourselves, and I think we've done fairly well since we launched Zero Commission. In India, um, we've seen a lot of I would say we've heard good things that people have said. Not everybody says good, but to a large extent, we hear that, and we believe that we are building that trust in people, saying that at the end of the day, Finvicia is an ethical, engineering driven business built by engineers. And the goal is to be seen like that and to be delivering on that promise. And
So
as long
it's
as
like a
we do,
classic freemium business model.
eh,
What you're giving for free is your top of the funnel. Some of those people will get converted into becoming paying customers of products which give you better margin. Here also, you're not exactly making loss on what you're giving for free. It's a good top of the funnel.
it's basically a good top of the funnel. You can think of it like that. And it's still not that we are losing money by doing something like this.
Got it. Got it. Okay. What are the other products? You said you have like 10 other product categories.
So within financial services, so we do have products in financial services, in healthcare, in technology, and in real estate. So within, let's say, if I have to say financial services, let's say, so we do have a brokerage business in India. We do have brokerage business internationally. We are licensed in Europe. We are licensed in Africa. We are licensed in Mauritius. We are in the process of getting our Australian license. We are licensed in Japan. Yeah, so these are the one, and Australia is in the making. That's for the brokerage. Apart from that, we also own the largest social network in the world for traders, which is called Zulu Trade. Essentially, you know, it's a social trading network where people can come in and they can see real time trades of successful traders. We rank them. We have tens of thousands of traders on it, and then people can follow their trades real time. If let's say if I believe that Akshay is a good trader, I can see your trades real time. I will see your trades, and they will get copied on my portfolio real time. Um, we've transacted about 2.5 trillion dollars worth of notional transaction volume on it since inception. We've serviced about 2.5 million traders across almost 150 countries from it. You don't have to be a client of Invasia. You could be a client of any broker in the world and still use our service. So it's a broker agnostic platform in that respect, and it's also platform agnostic. We support multiple platforms that people can use, on Zulu Trade. Um,
So, like you would have built integrations with a Zerodha and AppStocks and all of these where uh, people's trades are, the data is flowing to Zulu Trade so that it gets real time updated.
yes, data flows into Zulu Trade, gets real time updated, and we basically we charge brokers a fees. for being on the platform. So practically, when Finvasia initially acquired Zulu Trade was founded in 2007 in US. When we acquired it, it was still charging people commission. There was a commission of 1.2 pips trade. In Indian terms, that's about 1,200 rupees per kilo. This year, we made it zero cost. So now Zulu people can use Zulu Trade, without paying sort of commission on top of it. Um, then we also have
And
portfolios.com, which is a
the reason for a broker to pay you is because it encourages more trades. Like if a customer of a broker
Mm,
is on Zulu Trade, then he would be probably trading more because he would be looking at what other people are trading and copying some of those trades and like engagement
not
retention.
retention is more. I would not say they would be trading more.
Mm.
People would be longer with the broker because the client is not losing money. As for the audited stats that we have for Zulu Trade, more than 70% of our traders on Zulu Trade make money if they are not manually trading. If they're just doing uninterrupted copy trading on Zulu Trade, year over year, we see more than 70% people making money.
And the people whose trades they are copying, what's in it for them? Why would they share
The
their
people,
trading strategy? Yeah, like
they
we
do
are,
get paid for it. They get paid for it.
okay, okay, okay. Interesting. Yeah. Okay. You were
Then
talking about the next product. Yeah.
we have portfolios.com, which is a community driven website, mostly for people to share ideas and knowledge with each other, have access to trading tools and risk management tools, have access to real time, uh, uh, you know, uh, like these charts that we create automatically based on, things like that. So it's more like a knowledge based and an education based community platform that we own. And
And
then we
this
have,
was also an acquisition,
no, this was built in house.
and this is like a subscription product, free to
Right now
use.
it's free.
But eventually you'd have like some part free, some part paid, like a premium offering.
It's hard to say how we would monetize it. I think the first thing is because we understand technology so well and we have so much technology already. Um, it's easy for us to give it out for free. In future, how they all come together would depend upon the basic premises that we have. Don't charge if you don't have to, and keep your product ethical. So as long as those things are met, we will be, in the do that. Then we also have, then since we're talking about finance and fintech, we also have a brand that we are launching now. It's called One Vault. It's a brand uh, it's in the banking division. It's a more banking product. We will be giving people IBANs, multi-currency accounts, debit cards, credit cards, and a single source of um, like a single vault, which is a secure way to invest in anything and do anything with your money, whether it's investing, spending, saving, lending, all of that is within that single app. And that is, we are hoping our licenses to be approved by the end of this year. And we would be, let's say, we are hoping that before the end of this year, in fourth quarter, we would be launching this product. Um, and then basically tap into the.
How is it different from ICICI Bank app? On my ICICI Bank app, I can do everything. I can invest, I can pay my bills, I can buy an airline ticket, I can save, whatever.
I have multiple things to say around that. If I have to pick one by one, ICICI is amazing bank. They've done amazing, but still traditional bank. They were brokers before Shunya came in to India, and those brokers are still there. Not that they've lost their business, um, but they needed a change. Uh, I will be, would you like to have some changes in your ICICI bank account?
I guess I'm engaged enough with it to have strong opinions on it. I mean, for me, it's like it's there. Like it's not
If
something
there,
which I
it does what it says that it'll do,
yeah
but it
yeah
charges you money for everything that you do.
yeah.
And not
That's
just that, the typical example that I give, to people is when you go to a bank, you open an account. It's almost like You're going to a friend who's gone rogue. So let's take an example. You go to one of your very good friend. You tell him, "Well, I'm going for a vacation for 1 month. Can I keep my car in your garage? Because I don't know, I don't feel safe at my home." Like, "Oh, no problem. You can leave your car in the garage. As soon as you go take the flight, he gives your car to his girlfriend and say you can use it, no problem." You know. So when you're
So,
using,
so
you know,
you're talking about the fact that money you deposit in a bank is essentially lent out. Like a bank is a way for collecting savings of people and lending it out. People who need money to
yes,
invest.
it is important to have the credit available in any economy for the economy to grow. And that's hands down the most important thing. But then at the same time, when the risk of default starts hitting, who pays for that default? It's the taxpayer that pay for it. So practically, if his girlfriend crashed the car, you will come and pay for your car to fix it. So that whole cycle is not really a complete loop cycle. And if the risk is anyways borne by the taxpayers, then why is the benefit not given to the taxpayers or not to the depositors, who deposited the money to begin with? That mismatch is very large. And I believe that we will try to see if we can do something about that.
Right, right. So you're saying, as a depositor, I will earn at best 4-5% on my money, uh, and whereas the bank is lending that money out at 16 to 20% or so, and again depending,
Yeah.
like between a 10 to 20% range, depending on whom they are lending it out to. So there's a big spread over there, which the bank is. So in a way, it's wasteful. Like there should be a way for me to directly lend out money.
To, to directly participate in that, and not just that, I think even the demand of a user has changed. What they want from a bank is not just to be able to give you a bank account. You want to be able to go into your bank account and then, not go from one entity to another entity. You put money to this entity, then you can start trading, then you move money over here, then you can send it to your relative, then you move it over here, then you can use it with debit card. It has to be seamless, integrated, single platform to do everything that you want to do with your money.
Right, right. Okay. This bank is for Europe, right? You're not planning to launch this in India.
We will be launching digital banking services in India as well very soon. It's in the pipeline.
What licenses do you need to launch a digital bank in India? What are you launching here?
So not a digital bank. It's let's say digital bank is, let's say, neo bank. If you have to say, you need to have an NBFC license. You need to have brokerage licenses. You need to have liquidity licenses from international brokerages if you want to create those things. You need to maybe have 82 relationships in place to be able to assist with remittances and things like that. So there are a few licenses that sort of add up into it.
And what are you launching? What will that product promise be? Like, what will you market it as? What's the pitch? Just to help me understand.
It's still in the works. I think the most I can divulge is that we are looking at banking into India right now, as well as into the international markets. Uh, but hopefully, you will see things coming out soon in India as well.
Because the licensing norms are easier there. I guess Europe is pretty much
Not easier.
leading.
I don't think it's easier uh, by any. It's definitely in general it takes longer to get licenses and approvals in India, but the requirements are much more stringent, as I have experienced in Europe, than in India from a capital and a technology standpoint. They want to do an audit of every single thing about your technology, about the money that you have, your business plans, who are the directors. Like it's fairly exhaustive. That could take many years. Uh, this application is about 3.5 years old. That is now coming to completion.
But I mean, Europe has a clear path to getting that kind of a universal banking license. Right? I mean, in India, even that path is not clear. I mean, there is too much uncertainty, right? Like, in terms of being able to actually create and like say Revolut is, I guess, what a proper neobank should look like. I don't think India has a proper neobank because of regulatory constraints.
Yes, when you say revolute, there are multiple parallels as well to it. Um, India does have some limitations per se, because of the capital controls that India has and other regulations it has. But I believe every country has their own peculiarity. Europe has some other inhibitions that US might not have. So, you know, there are those idiosyncrasies, and peculiarities of every market, I would say.
Mm. Oh, correct, correct. Okay. So, what else is in the portfolio of Finvasia?
We also own one of the oldest fintechs in the world called Actuators. It was again an acquisition that we did. Uh, this is a company that builds technology for hedge funds and brokers and financial services company. We provide technology to some of the listed companies across the world and unlisted companies as well, and some of the largest as well. And as a matter of fact, one of the largest broker of US was completely built on our technology at Actuator. So that's our first mobile application that we built at Actuator was in year 2002 when people were still using GPRS. So it's fairly old. We transacted about 400 or the total money that has the total volume that has been transacted on our platform over these last 20 years is about 400 trillion. Every month we do a few trillion in terms of transaction volume on the platform. Um, so that's another one of our technology slash fintech offering that we per se have.
And
And
this would be, say, competing with the Bloomberg. I mean, this kind of volume of trillions is
this
something which only, like, say,
this would be
Bloomberg.
competing more with, not really. This would be competing more with Fidessa and those kind of platforms. Bloomberg is a much more comprehensive communication channel and database channel. You have a lot of data on it. You have a lot of calculators on it. You have so its own social network of Bloomberg where professionals talk to professionals. But their biggest value was the data that they brought together, not the trading application. Trading application at Bloomberg is, started much, much later. I first used a trading application on Bloomberg, I believe in year 2005 or six was the first that I used Bloomberg's fix engine to be transacting on the exchange.
Oh, okay.
We also have sort of a strategic partnership in
So this is not like a white labeled solution. This is more like a, you log in and you trade on it. The way retail users would be using retail apps like Charles Schwab's, hedge funds, and would be
Yeah,
using
yeah,
this.
yeah, yeah, yeah. They would be using it's not a white label. It's our technology that people can then resell them as a white label, but the technology is built and owned by us.
Okay, got it.
Yes.
Okay. Yeah. What else is in the portfolio?
And then we have a strategic partnership with the digital asset payment service provider that is licensed by Austrac in Australia, and we are in the process of getting a European license as well for it. It basically helps people to accept payments on their websites or their mobile application. Payments and also have the payments converted from fiat to crypto, crypto to fiat in that respect. But purely a B2B service offering, uh, which is licensed by Austrac under Austrac regulation in that respect.
This is like a payment gateway that can accept crypto. It's like a simple way of
It's
understanding it.
basically, yeah. So, in simple terms, it's basically a payment service provider that extends. It's a payment service provider. So, let's say, for example, if you have a Shopify application, or if you have a website on Shopify, and you want to accept payments on your website, you would go to maybe you would go to Skrill or NetTeller or Stripe, or you would use WooCommerce. Instead of that, you can also use Capital Wallet. So, on those lines, but the beauty of that is it allows you to also accept digital currencies as a mode of payment.
Uh, I guess there was a time for this business to be interesting, but well, I guess right now is not the time, right? With
Uh,
digital currencies
I
being out of favor.
I don't see that. I think it's not about digital currencies. I think it's about blockchain. There are problems that blockchain has solved. With any technology, if you look at what happened in 1987, what happened in 1999, what happened in 2007, whenever there is this, sort of greed that piles up unnecessarily over any innovation, whether that is innovation in, collateralizing debt obligations or innovation in IT or WWW innovations of 1999 or, financial services innovation of 1987, when too many people jumped on it, they did form a short-term crash to it. But in the long term, each one of those industries are tons of times better than what they were in 2007 or 1999 or 1987. So I do hear those things, but I believe that at the end of the day, if there's a tech, we cannot go to the market and say, I have a technology, what can I do with it? So I'll give you an example. Somebody came to me, a very good friend of mine. He's like, Natty, you're a blockchain expert, and I want to, build something in logistics on blockchain. Can you tell me what can I build? I was like, you don't take a technology and say, what can I build on it? You look at a problem and say, what technology can solve that problem? Not every problem could be solved by blockchain. And that is the euphoria the irrational exuberance that has come again and again in the world. And it's part and parcel of, capital markets evolution.
I mean, blockchain, the technology, I'm with you. It has a use case. But digital currency is what I'm not convinced that there is a use
Uh,
case.
then why do you think we are launching digital currency in India? Why is government launching a digital currency in India?
Okay. Although it's not decentralized finance, right? What the government is launching. Like traditionally, digital currencies are supposed to have that DeFi, decentralized finance angle to it. Uh,
We do not know yet. All we
okay.
know is that there is a. I mean, I've seen the paper from European regulators about the digital currency that's coming in Europe. Um, when you say it's decentralized, what is the definition and what is the let's say the benchmark for decentralizing? Is the benchmark that the money is not controlled and owned by central bank? Then where is the credit system coming from? If the benchmark is that your money is not held by, so let's say, for example, you're holding an app in your hand and you say, I have $1 million in this app, but that $1 million is just a database number. On the other hand, if you're holding $1 million of digital currency in your hand, it's in your hand, you know. So what is the level of decentralizing that you're talking about? At the end of the day, there is a value of central banks. I don't believe that this intermediating central banks is the right thing to do because then there'll be no credit system.
Got it. Interesting. And what else is in the portfolio?
Within healthcare, we have multiple products that we are working on or that we have launched. Um, one is a product that basically does analysis on your DNA, projects what potential diseases you could have in future, and then create preventive supplements customized to each person. The other one is basically working on diabetes reversal. We have, based on the patients that we have seen so far, so we have a physical facility in India. Uh, and you're also in the process of having physical facility in Canada. And we have University of Victoria doing or a research paper with us on this. And is how can we how can we put diabetes into remission? In simple terms, how can if you have diabetes, can we control your diabetes without giving you any medication? Or can we get you off of the medications of diabetes and your sugar levels will still be in control? What we have seen is we've seen a very, very large percentage of people having an improved glycemic control of their body. We've seen an overwhelmingly large number of people who have gotten off of, medication dependence. My mother is one of the biggest examples. She's been a diabetic from last 40 years almost. And that is why I have a personal touch towards this disease. And she has not taken any insulin injection for last 2 years now, and she's doing perfectly fine. So that's what we're working.
So this is what the jargon for this is digital therapeutics, right? Like the product that you're putting there.
Uh, Not digital. What would be your definition of digital therapeutics? Like you said, all these words, neobanks, they are very abused. What is really digital
Right,
therapeutic as per
right,
you?
right, right. No, I mean, like there's this company called Breathe Wellbeing. Then there's this Freedom from Diabetes, which incidentally my mother subscribed to that, and it helped her quite a bit. Um,
Yes, I believe it. They are doing good stuff, and they're helping people in their lives, which I'm happy about because for both me and my brother, healthcare is a very emotional topic, and we do not look at that as a business. Um, so I do believe that the more people get onto it, the better it is for the world in general. Um, we hired head of endocrinology at PGI Chandigarh, which is one of the most premier institutes of Asia. Their head of endocrinology uh, is part of our, this whole program that we have building. We've hired, one of the very few pediatric endocrinologists of India. I think there's just a handful of pediatric endocrinologists of India. One of them works with us. And then we've partnered with the multiple, universities because we want it to be evidence based, uh, and we want to be continuous care, and we want it to be based on facts, and not saying that you go zero carb and your sugar levels will drop. It's not the right thing to do. And then, yeah,
what are you branding this as? What's it called?
this is called Genie Health.
Okay, and it's available in India also.
It's available in India also.
What's the pricing?
I mean, Genie Health, we do a lot of other things. To answer your question, the pricing is between 1,000 to 5,000. 1,000 is where a person comes in physically to our facility because we do a physical medical facility. The person comes in, we take his blood samples. Uh, our labs are inbuilt within the facility. So in that half hour that you're waiting for the doctor, all of your blood samples and results reaches the doctor. And then you go through fundoscopy, you go through neuropathy, all of those tests at the facility itself. And then you meet, one of the senior endocrinologists, like I said, Dr. Bansali, who's the head of endocrinology at PGI. All of this combined is, I think, only 1,200 rupees. And then if you get on that quarterly programs that have been built, I think they are about 5,000 rupees.
And these programs would be like app-based nudges to drive behavior change, which fixes.
It's only one of the things, because you can never be digital. The problem that I have seen is people say, I start using your app, and what if my doctor does not get paid a commission? And he's going to get upset about it. Those things are very prevalent in India, and unfortunately, it is the way the practices are built. Uh, and we combine both physical and digital together because there is no digital only model that can completely do a comprehensive support to someone's needs. So it has to be a hybrid model where you have a physical doctor and you have digital uh, you know support with it.
Got it, got it. Like you would have a doctor on payroll for people to get regular concerns and advice and stuff like that,
We
in
have
addition
multiple,
to. Mm,
yeah, multiple doctors and payrolls, and it's a whole physical facility,
got it,
like
got it.
you would go to any other physical medical facility.
Hey, hey.
Um, and then we also recently did incubate a company with IIT, the Indian Institute of Technology, uh, here at Roper, and we they're Uh, it's we want to build products which we are experimenting already, and we've been researching it from last 2 years. Um, we want to be people come and tell me that pata nahi chala kya ho gaya, and I hate to say that I have heard about black boxes in finance world so much, but fact of the matter is our body is the biggest black box, and we want to do our bit to change that. We don't want people to come and say, uh, we didn't come to know it happened. And we are trying to build nano and micro devices that would go inside the body, track the body real time, and maybe some non-invasive devices that would be basically looking at other bodily fluids to real time detect and identify diseases. So that's what we are working on with Body which is the one that's incubated with IIT, within
Yeah,
IIT and in partnership with IIT.
this is called biohacking, right? When you're collecting data on your
Uh,
body to
no,
okay,
unfortunately, so biohacking is where you're hacking your body's mechanism to work. Biohacking is more like, let's say, for example, you start eating metformin because metformin is known to increase longevity in a person. And people start eating metformin just because it's time to start eating metformin. That's biohacking. And then you basically, you get, an electrode. Um, let's take an example. Let's say there are electrodes that you can put in the brain that will help with the motor, imbalances that a person has. Will that be considered biohacking, or will that be considered curing a disease? Biohacking is where you're proactively taking a measure to induce certain substance into your body to alter the known behavior of the body. But here we are not trying to alter anything.
right, correct, correct. I think typically biohacking is accompanied with data collection. Like that data collection is a big part of
Uh,
that move.
Data collection is part of analytics that they need. But data collection is for everything, even for if you go to a hospital, if you go and see any doctor at any point, you can always ask him, what does your protocol say? That means is what is a predefined medical protocol for the certain disease that you're, solving the problem for, and that protocol is based on the data that has been collected. So everything is based on data collection, but I think data collection, I mean, data is data. What you make out of it is the product. And in that respect, collecting data is simply just collecting data. It is not anything else.
How will you convert data into products? So you told me you're building devices to collect more data, get it real time.
It's
Uh,
real-time data. So, for example, today my mother does not have to prick her finger to see what her sugar levels are. She
okay.
scans herself with a mobile phone, you
Hmm.
know.
Got it.
And
Okay.
tomorrow, I want people to scan, their arm with a mobile phone to see what their lipid profiles are, to see if there are any cancer cells that have been induced in the body, to see any of those problems that we see that come with aging. Um, so that is monitoring it.
Got it. Got it. Okay. And uh, you would have some way to uh, run algorithms on this data and then give some recommendations or make predictions and stuff like that.
That would go in the clinical side of business. This is more biomedical engineering. So the job of this is to identify and alert when things, for all of these biomarkers that are in your body. What happens clinically is then in the hands of the clinicians at that point.
Got it. Okay. Okay. Got it. Okay. Okay. You said you had some ventures in real estate also.
Yes, we do have multiple ventures. It's a business my father started. We inherited. We do have a portfolio of commercial, residential, and retail real estate built primarily around premium segments.
What's the net worth of the group as a whole?
We are still a private company.
Okay. Amazing. Um, you would probably have your in your portfolio different businesses at different stages. Like there would be some cash cows which are throwing up enough cash to help you invest in the new experiments and bets that you're taking. So what are the cash cows for you?
We have been lucky in respect that we have mostly bootstrapped and everything is basically EBIT positive. So each of the businesses that I mentioned to you right now, they're all EBIT positive, and they have been EBIT positive within the first or the second year of us doing that business.
Like if you were to make a pie chart of revenue contribution from all these various products and businesses, what would be like the top two or three contributors?
Financial services and real estate, they both are very good. Healthcare, like I said before, we don't look at that as a business. We look at it as something that's close to us. So it would be very, very low in profit contributions.
What's the way in which you manage such a diverse set of businesses? Traditional wisdom says that one should focus, not do so many different things, which you're going against traditional wisdom here. Do you have any insights to share in terms of how you managed to pull it off? Uh, would love to hear that.
Yes, I had been, I was advised early on in my career by multiple people, focus on one thing if you want to make it big, including some VCs I spoke to at some point as well, maybe 10 years ago. And we keep getting VCs contacting us every 15 days or so, or maybe every week, sometimes we get email. Um, m- my answer to them was that, guys, first of all, we're not building these businesses to sell them. So it's not about, I build something that becomes valuable and then I find for an exit. I'm building these businesses with my brother and with my family because we strongly believe that we want to do this. That's number one. Number two, it is never a one-man show. It is not me or my brother or my father, who's running these businesses. It's been run by a very, very diverse set of people from across the world who have been very successful, in running those businesses with different companies. And they agreed to come together, work for Finvasia, and that I believe is our biggest strength. For example, different ones. Every business has its own management. So when you ask me what is the price that you are selling these diabetes reversal for, I said I think it is about this because I do not know exactly. It is 6,250. Uh, it has its own CEO. Every business has their own respective, not, we don't call them CEOs, we call them managing directors. They have their own respective managing directors and directors and teams. And where we step in is, as we grow, is more to make sure that strategically the products and the businesses are going in the direction of what we stand for, what we believe in. It has to be technology driven. It has to be transparent. It has to be solving a problem. It has to be looking at making money because of volume, not making money because we can charge this money. Those kind of things come into it.
Amazing, amazing. What advice do you have to young entrepreneurs, aspiring founders, in terms of how to build, how to scale?
I think would be very common that everyone says, but something that I just said is don't go out and build a business because you want to make money. Making money is very important. It is a barometer of success that you have achieved in your life. But the fact of the matter is that you don't look at a business and say how much money can you make from it. You look at a business and see, is there a problem that I can solve with it? If you're solving a problem, you will get paid for it and you will make it. So focus on solving a problem, focus on identifying what problem can be, how you can solve problem for the most number of people that you can serve to around you. And the success will be a byproduct of that. And then don't look at technology and say what I can build from it. Look at the problem and see what technology you can use for it to solve those problems. Those are important things to look at when you're trying to build a business and you're trying to make it large.
Uh, As an organization, your DNA was B2B, right? Because you started by managing money for hedge funds, PEs, which was essentially like a B2B kind of a business. which there is a hangover of that even today in the sense that you don't spend much on customer acquisition. Do you think that needs to change? Because as you're becoming more B2C, that spend on customer acquisition is like, it's par for the course in B2C businesses. If you want to scale them up, you have to spend on customer acquisition.
E- e- It depends upon the speed at which you want to acquire customers at different phases of business. Um, so far, we have been getting a lot of word of mouth customer acquisition, but needless to say, even Coke and MasterCard still spends on marketing, and we will have to spend on marketing. And for that reason, I believe every business, in some way or the other, spends on marketing. Um, so we will have to be at some point. It's just that we have not been as aggressive as we should have been. And that basically comes from the fact that we have been a buy side business for the most of the time, not a sell side business. And as we stepped into sell side, maybe just 5, 7 years ago, we are learning that will have to look at convincing the customer as well at some point.
So what's the difference here between being a buy side business and being a sell side business?
So buy side business is basically, so let's say a hedge fund is a buy side business because hedge fund is not selling anything. It's on the buy side. We are a buy side of finance, not on the sell. Sell side of finance is more like brokerage, insurance, and buy side of finance is more like wealth management, hedge funds, and those kind of things. Um, and That is where when you're on the buy side, you don't do any marketing. It's always the other way around. So that does impact the way we think to some extent. But then I think we will have to add up. We just don't want to be shamelessly in marketing to acquire the customers just based on marketing, and then marketing becomes a drug that you can never get off of. There has to be
Mhm.
substance in the product that has to match the marketing.
And that brings us to the end of this conversation. I want to ask you for a favor now. Did you like listening to this show? I'd love to hear your feedback about it. Do you have your own startup ideas? I'd love to hear them. Do you have questions for any of the guests that you heard about in this show? I'd love to get your questions and pass them on to the guests. Write to me at ad@thepodium.in. That's ad@thepodium.in.